Good morning, everybody. I trust your weekend went well. It was rather cool here in Wichita. We worked with 75 to 80 degree temps, which is probably about 5 to 10 degrees lower than normal for this time of year. We did get a lot of rain. Another couple of inches fell, so we picked up over 5 inches in the last 2 weeks, and we're under flood warnings and watches today. It looks like most of it, though, will go south of us today, so I don't know if we're going to get it or not after looking at the maps. But too late for the wheat crop. Will really be helpful for the grass/hay, alfalfa, corn and beans operations. And the weather has really been changing. As when I first came here, no one raised corn or beans in Kansas without irrigation. And now we have soybeans are planted in about the eastern third of the state, and we have dryland corn in the eastern quarter of the state. So global warming, I guess. Global warming is actually, if it does kick in and take place, not caused by man, but by the sun, in my opinion. It is actually a pretty good thing. Warmer temperatures, more food production. Humanity seems to thrive during those periods rather than the cold. So I'm all for global warming, as you well know, and I do my part. I burn charcoal when I grill. I don't do natural gas, and every time I get a chance to drive the car, I go out and do it and put more carbon dioxide in the atmosphere. So just kidding, people. Anyway, here we are. It is Monday morning. There's no news to drive today's trading. Probably the biggest dynamic we're going to face this week is going to be auctions. And the usual ploy of the market makers, the primary dealers, is to run it down into the auction on Monday, and then sometime on Monday or Tuesday morning find a bottom. And then the pattern this year has been 3 up auctions. Historically, it's the 3 years up, the 10 years down, the 30 years sideways to higher. So this is the historical pattern, and I don't know what we're going to get. The market is lower today, supposedly off of China's currency intervention and follow-through selling from Friday, and strengthen our stock market. No news today domestically. Biggest news out overnight was China's intervention to prop up their currency. So no news to drive the trading. 2 Fed governors speak. And I don't think they'll be floating any trial balloons. I think they'll be maintaining the party line. This is what the Fed's going to do. Interest rates are going to be kept low for as long as we can see. Quantitative easing will be done by this fall. We expect modest to moderate economic growth, as evidenced by last week's economic news. So we had a weak close on Friday, and we've got a B pattern, and we have been selling since 126 2 points ago. We are pointed lower. We've got this trading target down here, 124, and we've got volume 26 to the buck. So I think 21 to 25 would be a great buy. I really like this area, but I don't know if we can get there. But I do think we have a shot to trade below and get stops below 124. So we'll make buy 1, 29 to 01. Give ourselves a little room. Buy 2, 21 to 25, and I really like this area right down here to get long for tomorrow's 3-year auction. On the sell side, we're at 4.5. You can see London high at 10. You can see another high here in R period at 9. You can see the S period high at 8. So there ought to be pretty good resistance starting at 7 to 11. Sell 1, 7 to 11, sell 2, 15 to 19. I don't see any way to get to sell 2 today without some big help from the E-mini, and I don't think we're going to get that. A limit sell at 5 based on the structure is okay. And if you really, really want to be short, make sure you have something on. That's the first place I would put it. So I think want to be a seller first. See if we can take out 124. If we can't take out 124, then we can flip. Start to think from the long side or trade from the long side in anticipation of this week's auction. Looking at the 30-year, the knob spreads come in a couple of 30 seconds over the weekend. As you would anticipate when the market sells, the 30 years profile is not nearly as weak as the 10 years. And on Friday we did see 30-year bought and 10-year sold. The knob spread strengthen, and you know the easiest play going is on Mondays or Tuesdays get long knob spread in anticipation of a supported 30-year auction on Thursdays. So I think we're seeing that in the strength of this contract. We're at 05 right now. We've got volume at 12. We've got the mean at 8. Very, very aggressive, 7 to 11. Would like to sell against the mode up there. Would be sell 1, 15 to 19, sell 2. There's basically an 11-point spread between the 30-year and the 10-year. We'll make, actually I'm going to open up. We're going to make it 29 to 25 for buy 1, and then 17 to 21. Play for a little more selling in the knob spread. Okay, gold was up overnight on China's currency action. Not by a hell of a lot. I don't think gold's poised to break out to the upside. So I still think we've got probably a seller in the 60 area, starting at 58, and probably have a buyer against 50 starting out today. Talking to a couple of people who are just regular retail accounts. They tend to buy in silver. They don't tend to buy in gold because they feel it's more fungible. It's easier to sell at 20 bucks an ounce. 1 ounce bars will take you a lot farther than an ounce bar of gold. So anyway, right here we are at 60. That's resistance. You know, Roger, I put that link up to YouTube a couple of times, the channel for you, and on the website it's under daily analysis. So I'll go look on the website and send you a private message where it is, and I'll put the YouTube channels up again, which is, I think, the easiest way to do it. So we'll do it again. And on the website, I'll go see if I can get you a direct link for that too. So we're going to be selling against 60, then against 65 basically, and we're going to be buying against 50 and 45. Probably going to trade up a little bit and test resistance first this morning, but I don't think we're in a situation to break things out. European Union is stressed about deflation. And naturally they're big consumers. I think what has happened is that if you look at the United States, they've removed the inflation items from our inflation calculations, and Pretty convenient. Okay, crude is trading higher because of weakness in the dollar. One of the things that will rally crude is dollar weakness. And when things are quiet and there's no threat of war, it'll trade up and down opposite of the dollar. And so it's trading up opposite of the dollar off of China's actions. And we're at 103.50. We've had a pretty good rally, almost 100 points, and not a whole lot has changed. So a little higher right here. We're at 50 right now, so maybe 375, 104 for sell 1, and 4 1/4, 450 for sell 2. Might take a sell against 103.50. We need to see extension and to trade higher quickly, and then we'll make 275 to 103 buy 1. Now, if you really want to get long, 25s buying against this mode mean right here is that could be our first stop. And if we can't crack that, then you want to get long in anticipation of a test of 104. And we'll make 102.25, 102.50 buy 2. Looking at the euro, it's sold, and again, I think the easiest long-term sell on the board remains the euro dollar, and it doesn't go straight down. But the desire of that central bank is going to get it right one of these monthly announcements and bring selling into the euro dollar. They're struggling right now. Everybody said, well, it didn't sell or break on last Thursday because there wasn't any quantitative easing. But again, very, very difficult for the European Central Bank to come out and outright buy sovereign debt from banks. It's not what they were chartered to do. They can fight inflation. Their main charter is not full employment, it's fighting inflation. And I guess you have to say they failed at well, they've been very, very successful at fighting inflation. Okay, 25 to 35 is sell 1. 45 to 55 is sell 2. On the buy side, 90 to the buck, buy 1, and then 65 to 75. Okay, the E-mini is pointed higher. They'll use last week's action by the European Central Bank. All that extra money, upwards of $1 trillion now, and new money added to the markets, got to go somewhere. Part of that will go to stock markets around the globe, and some of that will get into the U.S. market. And then Friday's non-farm payroll numbers. So since March of 2009, various forms of quantitative easing have been cited as the reason for the strength in the stock market. That is to continue. And then maybe our economy is actually starting to grow. Ray Dalio's firm, I think the guy's name was Mark Freeman, had a pretty nice editorial or opinion piece on Friday, and they're pretty good. They've studied the 65 or 67 instances of deleveraging by governments, and surprisingly, it's not followed by collapse. It's usually followed by you muddle through, you kind of stumble through. So they see weak economic growth, but no catastrophic fallout from the current Fed policies, and the Fed will, over 3 years or 4 years, will be able to wean themselves from the current role. And I thought that was a fairly interesting take. Now, Dalio's manages $165 billion worth of money. They are long-term macro investors, and that's his long-term macro take on the market. His performance in 2012 and 2013 has suffered. Hadn't been as good as it has been. So just put that in, in its proper perspective. But it's a lot. Bad news sells, and most of the news we read is coming July 1. This currency changing currency laws. That means the bottom's going to fall out of our market. You have to put something up, and newspapers are masters of this. Bad news sells, and they know that. I think we're going for stops above 50. I see the best sell band is 55 to 59, and just kind of a pause. Okay, now we're at 1950. If we don't get follow through and take out that 55 area, somebody's going to take profits. There will be profits taken at 1950. So this would be the sell band. The 1950 I can sell failure to take out 1950. I mean, it's a number everybody's been talking about it. The interesting thing about 1950 was it's the top end of the range. Somebody wrote on Friday that we are very, very close to Goldman's, I think it was the end of 2014 estimate for the S&P was 1950. Okay, so the low end trading target was 1900. That's been there since 1/1. As of the last month, 1950 has been the trading target. And the second quarter results are supposed to be strong, positive for the stock market, with the correction now to come in the third quarter. So they do like everybody else does. If we don't get the correction when they say it, it's sometime in the future. And I don't know. I don't know where it's going to be. I do know this, though. I think the first trade today is from the long side, and then we got to take out 1950 and stay above it to stay long. So I like the buy side. We are buyers first, buying into weakness. We've got this single print here at 43, looks like 44. Would like to buy against that if at all possible. And then we have the mode from last Friday at 38, and buying a limit buy here at 39 would be, I think, really a great trade for the second one. So that would be structurally your first buy, and that would be your second buy. So give it a little room, let it come down the area, test it. So we got 44.46 for buy 1 and 40.42 for buy 2. And that's it. For the E-mini. No news to drive the trading today. Really, really quiet. News-wise, I don't think the Fed governors are going to say anything to upset the apple cart. I don't think they'll float any trial balloons for Yellen either. Roger, there's the link for the channel for the AM and PM commentary. Don Manning put that up there for me, and I'll go back and try to find it on the website and put that link up. Thanks, Don. And Roger, you've got your link that you've been looking for. Please bookmark that. And I'll put the trade recap channel up there too. There's a lot to be learned by just going over those trade recaps day in and day out. They'll help make you a better trader. Later.